Mike Tedeschi, Wealth Management Advisor with respect to wealth planning, and this week's market breakdown video. We're going to take a look at the four major U.S. indexes. We're going to talk about what's going on underneath of the surface. Are we seeing some rotation back into tech? And we will jump in and take a look at the U.S. dollar and commodities with an in-depth look at the commodity total return index as well, because it's at a very important level that we should pay attention to. And we're going to elaborate a little bit on what we spoke about last week with the global breadth expansion, because there's one country that isn't participating at all in this right now, and you'll probably be surprised to see which country it is. So let's jump right into it here. The S&P 500 continues to grind and make new all-time highs. Made a new high on Wednesday, turned back down just a little bit. I'm filming this Thursday before the open, and it looks like we're going to open back up above those all-time highs there on the S&P 500 right now. We have real strong strength still out of the Dow Jones, right? We made that breakout earlier this year. Back tested it, held, and continued to push up. It has technically been a very strong chart, strongest out of the rest of the indexes due to the lack of basically a dip when the tech essentially was pulling back. Speaking of tech, during that same time frame, we know the NASDAQ really got hit. But what we're looking at right now, new all-time highs once again. The last 2 weeks have been extremely strong, pushed all the way up, broke to new all-time highs. Yesterday we had a little bit of a reversal day, which might be concerned because we weren't able to hold over those all-time highs. But again, Thursday morning here before the market opens, futures are up and we're back up above that all-time high breakout zone. So we just want to make sure that we can kind of hold over that 13,800 level in the NASDAQ. If we do and continue to see that push higher, that would be a very, very good sign. Now, let's talk about the Russell. Russell's not making a new high here. It's only about 4.5-5% off. It had such an incredible move from the breakout last year. It was the strongest index here for a while, and now it has started to kind of trade sideways and has had difficulty going anywhere here over the last 3 months. Now, if you look at the chart of the NASDAQ at that same time, the NASDAQ had kind of topped out and started to pull back down when we saw real big strength out of the Russell. We were seeing rotation out of tech into the Russell and into the Dow. And now that we have had such a run out of the Russell, we're seeing that money flow back out of the Russell and back into the NASDAQ. What I've talked about a lot in terms of rotation is we want to see leadership names kind of pause for a bit, capital come out of those zones and go into other areas of the market. When that happens, that's healthy rotation. When money comes out of leadership name and doesn't go anywhere else, that's when we start to get concerned. So we are seeing a really strong rotation, and it's still looking really good. When we look at the NASDAQ Banking Index, it's back up there towards those highs as well. So financials are doing well. And when we look at the transports are doing extremely well, also pushing up towards those highs. So we are seeing really, really good action across the board. Now, let's jump in and take a look at some commodities. We're talking about the U.S. dollar. This is the chart that we have analyzed over and over again since the middle of last year, really taking a look at it. 93.5, 91 are really key levels in for the U.S. dollar. We popped right up into that zone a few weeks ago, and I said what happens here is really, really important. When we talk about what a downtrend is a series of lower highs. We have not negated that on the U.S. dollar. We still have a series of lower highs. We would have needed to gotten back up over this zone here to negate that, and subsequently when we tested it right here, we have failed and turned back down. Now we're still holding above 91, and that major support's back down here in that 89 zone. The dollar essentially has done nothing here over the last 6 months. Okay, when this has a resolution either direction, it's going to be very, very important, and that's why we keep touching on it. Commodities as a whole, we still want to talk about and pay very close attention. Inflation is is kind of the word of the day out there on Wall Street. We're seeing a lot of things have just incredible price accumulations. Let's jump in and let's take a look at our precious metals. Gold has not been performing in that regard, right? We have had a downtrend now for 6 months. Again, when we look at this from a long-term perspective, this chart is still extremely strong. When we look at it over the last 8 months, it leaves a lot to be desired for the gold bulls. Now, the good news is we do have a potential double bottom that's been put in right on that key support level above that 1650. This white line right up here, we want to get back up above that. That would be out of this little range right here. And interestingly enough, that's the American independence number, 1776. So if you're watching gold, watch for it to get up over 1776 1866. That would be the signal that we're going to try to make that move back up towards 1870. But as it is right now, it is still trapped in that range and is not a very exciting market. Silver's held up a lot better. All right, we can see that we're nowhere near the lows that were put in back in December, whereas gold has had more of a move like this. Silver is going sideways, right? Silver is viewed as the riskier of the two. It's the small sister of gold, and so it holding up better tends to bode well for that space. We're also seeing some of the other metals in the precious metal space that are more industrial, like platinum and palladium, holding up much better. Platinum still is acting very strong, holding up over that 1150 zone. That's the area that the bulls want to see it hold. Like to see it back up over 1250 for that target back up towards that 1350 zone. Palladium is still just a tick away from all-time highs. We keep talking about this. Let's see if we can get over 2800. That move up over 2500 was really big a few weeks ago. Made a nice bull flag and looks like it wants to continue to push right there at those all-time highs. So that is definitely the best looking precious metal, has been for a while and still continues to be. Copper looks a lot like the platinum chart, where we have pulled up, kind of based for a bit, and now looks like we're ready to make that next move up. So we're seeing really strong looking charts here still in the metal space. Now, when we get over to energy, we take a look at oil. We talked about the 65 to like 68, 70 zone as being a real difficult spot for oil to going to get back over because of how much price action we have on the left side of the chart. We've came right up into that a few weeks ago and have pulled back down. Now, the strength here in oil is that it didn't give much of this move back. We didn't hit this and then really start falling. We held very strongly. We're still up in oil year to date, about 30-something%. So still very strong here. The resolution of this zone in between about 55 and 65 is going to be important here. Move back up over that would be very bullish. If we are not able to get back up over this ceiling, that would not necessarily bode very well. So we want to continue to pay very close attention to what's going on here. Now, the total commodity return index, taking a look at commodities as a whole, what we have up on the screen right now is we've got a 7-year chart or so. There is a major level right here at 210, and the commodity index is really fighting at that zone. All right, this looks very much, more like a chart of oil than some of the other commodities, where we've run up into that overhead resistance from a few years back and are kind of, pausing there and pulling back a little bit. What happens here is really, really important. A move up over that 210 zone. You're going to see the commodity space as a whole make a 6 or 7 year high breakout, which would be a very bullish sign for the group. The next resistance is up at that 234, and then there really isn't much price action much higher than that. So it's got the ability here to kind of make an explosive move higher if it's able to get up over that 210 zone. We're going to continue to pay very, very close attention to what goes on here because I think it's very, very important. The country that's not participating broadly like the rest of the globe is actually China. We take a look at the Esch-Comp here. We are actually pushing on the advanced decliner line, 5-year lows here, and we have not seen that strong performance like we've seen in other areas of the globe. And when we look under the surface at the breadth reading, we take a look at the percentage of stocks above their 200-day moving average. It's less than 40%. Right? In healthy markets, we see that average up over that 60%. And that's really that kind of line that you want to pay attention to for, expansion and declining in terms of breadth underneath of the surface in an index. So China is not participating in this that we've seen across the globe. And we're going to want to continue to pay very close attention. It's an extremely large trading partner of ours. It's a large economy, of course. There are some issues that the central bank has kind of laid out here over the last couple of weeks where they might be throwing some ice water on what was a really solid run out of China here for a while. But this is that one kind of glaring omission from the global expansion that we have seen here over the first half of this year. We really want to pay very close attention to what's going on over in China, and I'll continue to keep you guys apprised of that as well as we move forward. As always, I hope you guys found this content useful. If you have any questions, you want to reach out to me directly, discuss anything related to the markets, please feel free to. You can reach me at mtedeschi@perspectivewealthplanning.com, or you can give me a call at 814-580-9881. As always, I hope you guys have yourself a fantastic week. I'll see you guys next week. Take care.